What's up everyone, it's Caddy with MoneyVest. So markets here pretty much at a record high, 24th all-time high for 2024, I believe. So it's been an absolutely incredible year for the markets so far. So this video, I want to give you guys a little bit of an update. Of course, Nvidia earnings are coming out later today, and also FOMC minutes are also scheduled for later today as well at after 2 p.m. Eastern. So hope you all are doing great, and of course, make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the members only private videos, including a 16% annual discount that expires at the end of this month. You do get access to all the alerts as well as the beta access to our MoneyVest platform that we're going to be launching very soon here. So again, links going to be down below. And individual courses are currently 50% off. Coupon code May50 that also expires at the end of May. So first things first, let's talk a little bit about what is coming up for the day today. So futures are muted as Nvidia results are basically going to be the most important aspect of the entire market, because Nvidia is probably one of the hottest, if not the most popular and trending stocks in the market, with FOMC minutes also scheduled to come out at 2 p.m. Eastern. So all eyes are going to be whether Nvidia can actually see very strong results from beats on revenue and EPS and data center revenues, as well as the guidance that they provide us in the market, and can they meet these sky high expectations and sustain a rally in the shares of the company and other AI related stocks as well. So it is going to be a very important day for Nvidia. And despite the stock's incredible recent performance, there's tension in the markets with investors eager to see if Nvidia's impressive momentum from 2023 has carried into early 2024 as well. We should note that the bar is set pretty high, and another double-digit beat and raise might be a tall order as well. And that's why when expectations are so high, regardless of how strong the company numbers are, if there's a disappointment, stock can still open itself up to huge exposure to the downside. On the contrary, though, if the expectations are really low and the results are expected to be really bad, and the company reports somewhat less bad numbers, that can result in a huge upside potential for stocks as well. That's just how the markets work. Nobody looks at on an absolute basis. People look at those numbers on a comparable basis versus expectations. And Nvidia's bar is probably set at the highest standard, with expected earnings and revenue growth in the triple-digit range for the company as well. Now, this right here is a chart, which is a very interesting way to look at the markets and volatility and technicals, which I wanted to present. So John Hussman, shout out to him. He basically mentioned the S&P 500 and the volatility ratio. It's not an investment strategy, not a timing signal, not a market call, not a forecast, just an interesting gauge of sentiment extremes. And just FYI, the steep retreats are early 2018, late 2018, early 2020, early 2022, early 2023, and fall of 2023 as well. So basically, when we do see these declines in the ratio for S&P 500 and volatility, that usually does signal, of course, the markets pulling back and selling off. And right now, of course, we are at an extreme once again at over 430, as I pointed out in one of my previous videos and market updates, that volatility is at an extremely rare and low level, considering that we are trading at under 13, under 12, which basically does suggest that on a percentile basis, we are really low here, and any day or any week here, we could see a spike in volatility, resulting in the markets, of course, pulling back, seeing a drawdown in the S&P and the Nasdaq as well. Something to, of course, be cautious about and be aware of. That is a potential. That's exactly why I think it's more opportunistic to be a little bit more in cash, have dry powder ready, because when the markets do end up retreating lower, that's when we're going to start dollar cost averaging more heavily and start buying a little bit back into the market. Right now, I am 16 to 18% cash. I'm completely fine with that positioning, because that allows me to have some dry powder ready for when the markets do end up, let's say, pulling back, and I can start, again, be more aggressive on the long side. Now, this right here is in terms of valuations. S&P 500 trading at just under 21 times next 12 months or forward price to earnings multiple. And you'll notice that historically, this right here has been a pretty extreme level, which is closer to 24 to 25. And again, on an average basis, it's been closer to 11 to as much as 15, has been a little bit more on the average side for S&P 500, even as much as I would say like 19, 18, 19 has also been pretty standard over the last 10 years. And right now it's a little bit higher than what we have seen in the past. Now, Charlie Belio put together this data as well. So S&P 500 ended the day at a new all-time high. It's 24th for the year. Over the last 12 years, the S&P has hit 371 all-time highs, which is more than any 12-year period in history. Just goes to show how much of a strong momentum we have witnessed from the S&P 500. So the total of these is going to be 371. So absolutely incredible momentum from the markets, and more specifically 24 coming in 2024 so far. And I'm sure it's not the only time. This is not the top. You may have more potential upside here for S&P 500. Carl Quintanilla also posted this. The S&P 500 is already 9.8% higher than the average forecaster, though it would be 7 months from now. So S&P 500 forecast, of course, end of the year forecast was 5,000 or something like that before going into this year. And now the S&P is already 9.5%, almost 10% higher than where most analysts and expected forecasters were basically pricing in for the S&P 500 to be. So again, predictions don't really work over the long term from the markets, even though that's what sells. That's what sells in the media for headlines. This was the predictions for the entire year. Now, when it comes to S&P 500's, the interest rate expectations from the market, this is where we are sitting. So September 2024 is when the market's pricing in for the first rate cut of 2024, all the way to January of 2025 for the second rate cut, and then April 2025 for the third rate cut for the markets as well. So this right here is the decline in interest rates for of course the federal funds rate is what the market's pricing in. Earlier we were expecting, of course, 3 as many as 6 rate cuts, and now the market's only pricing in for 1 for 2024, as we have discussed before. In 2025, 1 more, and then actually 2 more in 2025 is what the market's expecting. Now, in terms of the entire market, so Tesla having a very, very strong day, up a little bit over 6%. Amazon flat, Google very flat, Meta is down slightly, Apple flat, Microsoft flat, Nvidia also flat ahead of the earnings. And the entire, of course, semiconductor sectors were basically kind of like the calm before the storm. We did see a bit of a pullback in energy, in healthcare, in a little bit of materials, and then consumer defensives, healthcare. Part of healthcare like Eli Lilly and UNH Industrials pushing higher on the day. So this right here was the entire market. So a little bit of a split market with utilities and defensives pushing higher. Everything else was down. And in the last 1 week, again, most sectors are green with cyclicals and energy selling off. And in the last 1 month, of course, most sectors in the S&P 500 are pushing higher, with energy here down about 84, 85 basis points as well. And then of course we got oats, lumber, orange juice, cotton prices, wheat, soybean pushing higher, with of course gasoline. We got palladium, natural gas, copper prices selling off as well. Bitcoin just a little bit over $70,000, and Ether just over 3,700 as well. Of course, near all-time highs here for these two cryptos. Now coming over to the markets here, more specifically starting with volatility, so up a little bit over 2.4%, 12.14. Yesterday we hit lows of about 11.84, so again just sub 12, and right now we are pushing higher just a little bit, so just back over 12 here. And again, the target's going to be at all the way up to 15 to as much as 18 to 20 for the volatility. Next time we're at those levels, of course, it's going to be a big buying opportunity for us. And I will be, again, dollar cost averaging. We'll be sending out alerts because that is where our focus is. We're trying to understand the risk and the reward in the market, and it is best when the volatility is higher. It is not so great when the volatility is lower. So just got to be super careful with that as well. Now going over to Bitcoin. So this right here is going to be cryptos. We're seeing a very nice momentum higher. So after that support level getting validated, resistance all the way up to as much as $72,000. And we're seeing a little bit of that rejection and that resistance there for Bitcoin, and support level, of course, going to be staying put at $67,000, $68,000 for Bitcoin here, pretty much tagging along to that resistance at the moment. Same thing with Ether here, very, very strong momentum and possibly a huge breakout here beyond that 3,700 level. And this right here will go ahead and turn this level into a support, another support down at 3,300, with a next target pretty much at all-time highs for Ether, sitting all the way up to $4,000 as well for this crypto. Coming over to crude oil, we're seeing a little bit of consolidation again. So we did see that breakdown from this head and shoulders. A lot of consolidation sideways, and that next support is going to be down at $72, $73 a barrel for crude oil, with a very strong resistance between 81 and as much as $82 a barrel for crude oil as well. So lots of resistance, and of course that area of supply for crude oil, and again, support level is going to stay put inside this green rectangle moving forward. Talking about the MoneyVest index, so 3.96 is where we are, so a little bit under 4 at the moment. And as we have already discussed, the lower it gets down to, the better the buy signal will be. The higher it is, the more cautious and the more alert we need to be moving forward. And again, it's very simple, very good sort of metric that I use to better time the risk-reward ratios here, and how potential opportunity is in the markets. And at the moment right now, as we've already discussed, valuations a little bit more on the higher side, overbought conditions on the S&P, the Nasdaq, the markets in itself has been pushing higher volatilities at a really low level. Not to mention, of course, we got market breadth indicators also suggesting for conditions that are a little bit more, again, overbought from a broad-based technical market breadth indicators as well. So we got the MoneyVest index sitting at just under 4. We're keeping a close eye on where it is, and the lower it gets down to closer to 2, 1.5, 1.7, those are going to be the buying opportunities for us, dollar cost average into the markets. Now going over to the S&P 500 now. So S&P 500, as you already know, again, hitting new all-time highs, 24th all-time high in 2024. And again, this right here is going to be the entire sort of analysis. Really, there's not really much for us to go over other than the fact that we are hitting new all-time highs. RSI MACD is a bit more on the extreme side, overbought here, almost 70, and the MACD also been pushing higher. So just got to be super careful. The last really good buying opportunity was back on April 20th, and that's exactly what we're going to be waiting for. Again, it's quality over quantity. I'm not here to trade every single day, or kind of come out here and kind of hype up the market and be like, yep, there's more upside, there's another 20-30% on the S&P 500, let's just buy. No, but just to really give you a very objective and real analysis and kind of help you understand that the risk reward is not favorable at the moment, but it's going to get better as prices come down. It's all linked with prices. It's always linked with prices. And support level right now in the near term is going to be at 52.65, kind of aligned with that previous resistance, now potentially acting as a support. Coming over to the Nasdaq, and again, same story, hitting a new all-time high at 16,832. Very strong momentum. RSI almost at 69. MACD also pushing higher. So just got to be super careful. And like I said, the last real buying opportunity was back on April 20th here. So that's where we really witnessed the markets with a very strong upside, potentially another 10.6% from those levels, right? So this is going to turn into a new support for S&P 500 now, sitting roughly between 16,300 and 16,400 for the Nasdaq. Now coming over to Apple, so AAPL, Apple here on the day, pushing higher, 192, so very strong move, 69 basis points higher. This was an entire trade idea that we had on Apple stock, which again worked out really well after consolidating sideways for such a long time. For Apple stock here, we're finally able to see the stock almost back up to all-time highs here and getting up to over 192, 193. So again, this right here was the entire analysis, a lot of consolidation sideways, and then finally reversing very nicely from 164 back up to 192, 17% higher from where it is, and resistance and target's going to stay for roughly at 193, 194 inside this red rectangle for Apple. Talking about Amazon here also seeing a little bit of a pullback, so resistance is going to stay put at 188. So this right here is going to be that target, as we have already discussed. Seeing a slight pullback for Amazon, RSI MACD coming down. Support level is going to stay put right over here at this higher low, as well as this horizontal support for Amazon at close to 171. So that right there are going to be few support levels to keep in mind for Amazon. Now Tesla, on the other hand, had a very strong day. So beautiful day for Tesla, breaking out above its $178, $180 level, although pre-market pulling back almost 2%, so giving up on some of those gains. But this right here is going to be that support, and right now, once again, we're coming up to that resistance, we're coming up to that supply in the 190s and 200s for Tesla. And as we have discussed in our previous videos, I will be looking at selling calls as soon as it gets up to over $200, because I've got almost 700 shares that I've got, can sell calls on, 7, maybe not 4 or 5 calls that I can sell. and generate some pretty decent premiums. If there's a couple dollars of premiums, that would be fantastic. If not more, that would be even better. So keep a close eye on Tesla here. At this resistance at 197 to as much as $200, and support level is going to stay put at 177 for Tesla. Talking about Microsoft, the Microsoft getting up to all-time highs here, breaking out almost with a very nice move to the upside. Again, coming up to that overbought conditions on the other side, the MACD and the L3 banker oscillator as well. Resistance is going to stay put at 430 for Microsoft, and support level is going to stay put down to 416, down to as low as 393 for Microsoft. Nvidia, the star of the show today, they're reporting earnings. I did a video on Nvidia. Make sure that you do check that out if you haven't already. We go over in a lot of detail as to what expectations are for Nvidia, and resistance is going to stay put roughly as much as 970, support level down at 910 to as low as $844 to as much as $744 for Nvidia as well. So those right there are going to be some levels to keep in mind for Nvidia, and of course earnings today are going to be very, very important for this company. Advanced Micro Devices also did recover from its support of 150, so we did sort of push back higher from those levels, and again we are coming up to that support in the 164. Resistance and target's going to be back up to 183 for AMD. So that is going to be that next potential target in case we see that next leg up higher. But support level is going to stay put at 164 down to 151 for Advanced Micro Devices. So those right there are going to be some levels to keep in mind for this stock. Talking about PayPal, and PayPal here consolidating sideways for a really long time. So we've just been trading sideways in that range. Higher low is going to be right here, sitting roughly around $63, $64 with a resistance and a target's back up to $68, $69 per share for PayPal. And again, a lot of consolidation and a lot of sideways trading for PayPal, with the resistance staying put roughly at around $67, $68 as we have already discussed, kind of like a triple top for PayPal. Visa, on the other hand, starting to roll over from that resistance as we discussed, 283, 284, a very, very strong resistance to watch for Visa, and support level is going to stay put at 265 for the company. So very, very strong area of support and demand here for Visa at 265, and resistance is going to stay put at 282 for this company as well. Microsoft we've already discussed. Let's go over to Meta Platforms, and Meta here also starting to roll over back down to its area of support and area of demand here. Resistance is going to stay put at 515 to as much as 531 for Meta, and that right there is going to be an area of resistance and supply, and support level inside this green rectangle between 461, 471 for Meta, all the way down to $386, where I would feel a lot more comfortable sort of adding and dollar cost averaging more and be more aggressive on Meta Platforms at those prices. Netflix with a huge breakout, so breaking out above its resistance of 636 as well, 1.5% higher yesterday. So we'll go ahead and turn this level into a new support, and I believe it hit a new 52-week high of $650, and the all-time high still sits at $700, which still has, again, potential for Netflix to get to. That is going to be that next target for Netflix. And Google, on the other hand, also pushing higher very nicely. Support level is going to stay put down to 173 for Google, all the way down to inside this green rectangle between 150 and 154, 155 for Google as well. So those right there are going to be some levels to keep in mind for this company. And finally, we come over to Enphase and Costco. And Enphase here, a lot of consolidation, lower highs and lower lows. So inside this green rectangle over here, very, very strong area of demand and support. And again, we've got the lower high over here as a resistance, and targets back up to 138, 139 for Enphase. Support level is going to stay put down at 106, down to as low as $92 per share for Enphase. And finally, we come over to Costco with a huge breakout above this resistance, hitting new all-time highs. Support level is going to stay put at 784, 785, down to as low as 747 to as much as $704 per share for Costco. So there you have it, Nvidia FOMC minutes, a lot of members talking this week. So we got lots to, again, unpack for the markets here, and we're closing in the month of May, which was usually in the past sell in May and go away, but the markets are higher in the month of May with 24th record high getting hit on the S&P 500. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like, and don't forget to subscribe to the channel if you're just joining us for the first time, and links to our Discord and Patreon is going to be down below if you're interested in joining us and getting that 16% annual discount that's available until the end of this month. As always, happy investing. I'll see you all in the next video.